How's it going, everybody? It's Stas here. So I wanted to hop on here very quickly today and talk about a couple of moves I'm looking to make in my M1 Finance portfolio, which, if you guys didn't know, this is a portfolio I started strictly for the YouTube channel 2 years ago from $0 to now almost $15,000. So we're going to break down some numbers today, my reasoning behind making these moves, and I want to show you all again how I make moves here on M1 Finance and the way I'm constructing the portfolio overall and the reasoning behind it. So sit back, relax, take a sip of your water, get $50 from M1 Finance down below. Literally, all you have to do is use my link, deposit $100, and we each get $50 free guaranteed from M1 Finance to invest with. And you can check out my Patreon if you want all my real-time moves and a bunch of other perks. All of those are linked right down below. So as of now, the portfolio, like I said, is almost $15,000, and I'm not going to focus too much on all of the holdings in this portfolio. Quite frankly, you guys probably know a lot of these holdings. And actually, wait a second, I forgot to update you guys on this. I mentioned this on Patreon a couple of days ago. I did an update over there exclusively for my members on Patreon, but I actually added an S&P 500 ETF to this portfolio, about 25%. Well, it's not 25% right now. It's about 4% of the portfolio, but over time, I want to get VOO up to about 25% of this portfolio, and I ended up selling out of Altria to fund the VOO ETF purchase, so that's a big move that I made recently. And when it comes to the move I want to make right now, I'm looking to add Alibaba to the portfolio, ticker symbol BABA. And first and foremost, I am stunned as to the valuation of this company right now with the amount of growth that this company has ahead of itself and the amount of growth that we've been seeing the past couple of years. I mean, look at this. Alibaba, and let me see if you guys can see this. Yup, you can see it. Alibaba from 2012 to 2020. Look at the revenue growth that it has seen from 3 million or 3 billion all the way, and that was in 2012, 3 billion, all the way to 71 billion in 2020. And even from 2017 to 2020, it's gone from $22 billion to 71 billion. So the growth there is just astronomical. It is unbelievable. And we're noticing gross profit growth is incredible. Operating profit, EPS growth, a lot of growth here in terms of revenue, profit, EPS, a bunch of awesome stuff there. And when it comes to the PE ratio of Alibaba, this completely blew my mind, guys. It is a 24 PE for that type of growth. That is a steal. Typically, when you see companies that are growing massively, they have PE ratios that are way higher than what the market's PE ratio is. And these companies include Shopify, Tesla, Amazon. Some of the PEs on these companies are just disgustingly large, and the PE on Alibaba is 24. I mean, this is less. It's got to be less than the S&P 500. It's for sure less than the Shiller PE, which is the PE ratio from the past 10 years, pretty much smoothed out. The Shiller PE right now is about a 37. So you're telling me Alibaba, with all the growth it has ahead of itself and all the growth it's been seeing, only has a 24 PE. That is a steal in my opinion. And sure, a lot of Chinese companies right now, they're under scrutiny. It's a lot going on. There's a reason why Alibaba, Tencent, Baidu, even Neo, a lot of these companies, they've been slammed. There's regulatory risks and so forth. I'm not looking to get into that in this video, but there's some risks there. But with an investing strategy that I personally use, I look at companies that are beaten down, they're out of favor, they're seeing a lot of scrutiny, and I ask myself, is this a short-term thing? Is this going to be a long-term problem for the company, or is it a short-term hurdle where they're going to jump over it, and then ultimately the market is going to reprice the company back to its fair value. And in my opinion, I think all the scrutiny right now, the craziness with Jack Ma, regulation, the American depository shares, you're not actually owning the company itself. I feel like all of this stuff is it's short-term stuff. And Alibaba, it's owned by the biggest investors in the world. Ray Dalio, Charlie Munger, a bunch of other people, big prominent investors own Alibaba. And the truth is, I think China has a bright future. Believe it or not, whether you want to believe it or not, I think China has a great future ahead of itself. The two powerhouses in the world are China and the USA. So Alibaba is at the forefront there. And when it comes down to what Alibaba does, I mean, you guys should know this at this point. They operate through four main segments: core commerce, cloud computing, digital media and entertainment, and innovation initiatives and others. The company operates, I can't even say this, Taobao Marketplace, a mobile e-commerce or commerce destination, Tmall, a third-party online and mobile commerce platform for brands and retailers, Alibaba Health, internet platforms for pharmaceutical and healthcare products, and so many more things, guys. I mean, this list is very, very long. And mind you, the market cap is $570 billion, which is still pretty large, but considering some of the American big tech names are $1 trillion, $1.5 trillion, $2 trillion, I think Alibaba has a long ways to go, especially being in the Chinese market, which obviously, guys, China, it being 1.3 billion population, there are a lot of people there, and a lot of people use Alibaba services. So overall, I believe the company, on that very brief analysis, I think it's undervalued. We're seeing a lot of growth. The PE is just extremely low. And we're noticing the stock's down. I don't have my ThinkOrSwim pulled up right now, but the stock is down 40%, 50%. So in my opinion, now is the time to add, at least in my opinion. You must always do your own research, guys, as always. So I'm going to end up adding it right now, and I want to show you guys how you make moves here when it comes to M1 Finance. So let's say I want to remove a slice here out of my pie. I'm going to simply click it, and the one I'm going to remove is AbbVie. And let me explain. AbbVie is a good company. It's great, but I own two healthcare companies in this portfolio. One of them's AbbVie, the other's J&J. There's no way I'm ever selling J&J, but AbbVie I would sell, which I'm about to sell right now to add Alibaba. And another thing worth mentioning is, look, AbbVie, it's growing. Sure, if I pull up Quick FS, let me show you guys AbbVie's numbers. I mean, AbbVie's growing too, but not nearly as fast as Alibaba, not nearly as fast. And AbbVie's PE, look, Baba's PE is 24, like I said, right? AbbVie's PE is a 40. I mean, come on, guys. AbbVie's a 40 PE. So, yeah, I'm getting rid of AbbVie, and this is one that I've held for over a year, so I'm going to pay long-term gains on this. My average on AbbVie is $95. I checked before making this video. Now it's at about $115. So we're going to take a decent gain there, and, of course, I've made dividend money over the quarter, so I'm going to remove AbbVie, and now I have to add another 4% to this portfolio in order to obviously take it from 96% to 100%, and I'm going to add Alibaba. Let's see, Alibaba's right here. Add Alibaba, and I'm just going to boost it up to about 4%, and essentially what M1 Finance is going to do here, once I click save, this is going to just sell my AbbVie shares on Monday morning, and it's going to reinvest that money into Alibaba. I mean, you guys can see if I click the view details, you can see actually, oh no, it's going to put it in VOO because of the percentage. When it comes to the percentages here. So, okay, I'm gonna end up fixing this after this video, but overall, guys, it's gonna sell out of AbbVie, and it's gonna start funneling money into VOO because it's underweight. Like I mentioned earlier in the video, I added VOO, and then it's gonna start putting some money into Alibaba. And one thing I'm going to do as well, I'll probably do that right now, is I'm going to sell a little bit of Pepsi. This is smart. Not completely, but I'm going to trim it down a little bit because Pepsi right now is, what is it? It's 6% of my portfolio, but the goal weight is about 4%. So what I'm going to do right now is I'm going to sell about $200 worth of Pepsi, maybe even a little bit more than that. Let's do $300 worth of Pepsi. Sell 300. Confirm sell. So that's going to trim down my Pepsi slice a little bit. And then I'm going to take that money and then I'm going to add more to my Alibaba slice, which would beef it up to about a $500 position at first. And then, of course, I'm going to end up adding more to that over time and beef it up to maybe 4 figures, 5 figures ultimately. So, yeah, Alibaba, I'm buying more of this or buying into it. And full disclosure, I actually owned Alibaba when I first started this portfolio a little bit ago, and I sold out of it for about a $40 per share profit, and now I'm getting back into it. So yeah, Alibaba, holding on to it tight. I'm going to buy it and hold on to it tight at these suppressed levels. And overall, that's it, guys. I hope you all enjoyed this video. That is what I'm doing. I showed you all a little bit of how M1 Finance works, and if you guys are interested in opening up an account with them, I've been with them for over 2 years at this point. They're awesome. The platform has only gotten better. Check out the link down below. All you have to do is deposit $100 and you simply get $50. It's literally that simple, and it's a guaranteed 50. It's not like these other platforms where they give you 2 stocks and then you end up getting a penny stock, 2 penny stocks. No. You're going to get $50 from them when you deposit $100, and I also get $50 because it is an affiliate link. And if you guys want to, you can check out my Patreon down below. All you have to do is go to the link, and you get all my exclusive updates, perks, buy, sells, call-outs, a bunch of stuff there. Check all that stuff out, guys. Link down below. I'll catch you all in the next video. Keep crushing the market. Stay safe out there. Peace out.